Hey, welcome to episode 2 of Who is this loan officer person? Today we're going to talk about types of lending. This can be a complicated topic, but I'm going to try to keep it pretty simple and boil it down to about 5 minutes like I did the last one. So I hope you enjoy and learn something. Let me know in the comments or email me back. Welcome back to the journey on understanding who this loan officer person is. In episode 1, we talked about types of institutions, and today we're going to talk about types of lending. So what is residential financing? Residential financing includes financing on 1 to 4 family properties, whatever their purpose. So they could be primary residence, investment properties, second homes, that kind of thing, but 1 to 4 family properties only. And while there are a lot of private investors out there, hedge funds, etc., that will fund their own type of lending programs, and we usually call these kinds of things hard money. Most of the residential financing is purchased on the back end by what we call the GSEs, or government-sponsored entities. These are also known as Fannie Mae, the Federal National Mortgage Association, or Freddie Mac, the Federal Home Loans Mortgage Corporation. These are government-sponsored entities that provide liquidity to the mortgage market, and they do so by issuing mortgage-backed securities. So they take a bunch of mortgages, they bundle them up, they cut them up, and they sell them to investors, and they sell them as bonds. That provides finance, that provides them money to buy more, and which allows banks to sell them more. Generally, the process works like this. A loan officer funds a loan. That creates 2 distinct assets. It creates the paper, what is also known as the note, and it creates the servicing asset. Servicing is those people who collect your mortgage payments, and if you have impounds, pay your taxes and insurance and take your phone calls, etc. And they're actually 2 separate things. So the note might go to the GSEs and the servicing stay with Wells Fargo, for example, or Wells Fargo might sell the servicing to Everbank, and Everbank but doesn't buy the paper. Everbank just takes the servicing. So they're completely separate assets. After the loan is funded, these assets are delivered to the secondary marketing team at whatever institution is the final investor on the loan. And that secondary marketing team determines what to do with those assets. Depending on the priorities of the institution, they might sell or keep one or both of those assets. Whether the bank chooses to securitize these assets, sell them off as a bundle, or sell them individually, the bank receives funding from the sale of those assets, which they then use to fund additional loans and whatever their priorities are. What are channels? Channels are simply avenues through which loan officers obtain their funds to fund your loan. So we have a retail channel. This is where the loan officer works for the bank creates the guidelines or uses a GSE guideline, funds the loan themselves, and will either keep the loan or sell it as described above. Correspondent channel is typically done at mortgage banks, but can be done through any bank. And mortgage banks will develop a relationship with another bank. So call the mortgage bank Bank A, and we'll call the funding bank or investor Bank B. So the Bank A makes an agreement with Bank B to follow their guidelines. And Bank B promises to purchase those loans on what we call a flow basis. So the loan is funded, then it is sold usually within 60 days. In these cases, the note will typically be in Bank A's name, the mortgage bank, or the correspondent lender. And the correspondent lender uses warehouse lines of credit to fund these loans typically. They hold them on their warehouse line for 2 months while they perfect the lien and then send the loan to the end investor. Then there's the broker channel. In the broker channel, there is no Bank A. It's just the broker asking Bank B to use their funds and their documentation to fund a loan for you. Once the loan is done, the loan goes directly from the escrow officer's hands into the hands of Bank B, and the broker gets paid. So that was short and sweet. I hope you enjoyed it and got something out of it. I did kind of keep it on the light side. So if you have any questions about it, feel free to email me or post a comment under in the comment section. I don't really know how that works because I'm new to this, but you can reach me for any lending questions. I have 28 years of experience and would love to help you. My phone number for everything is 650-288-8170, and you can see my website and email address right there. You have a great time, and we're looking forward to episode 3, licensing and the NMLS.